Hey everyone, we got some great news for Micron technology stock investors, especially when you consider the company's latest third quarter performance in terms of revenue and profitability. Also, the company made great progress in terms of technology and operations, and the company's benefiting from investments from the US government on manufacturing expansion on semiconductors. So, I'll go a little bit deeper on each of those three categories aforementioned and why that's great news for Micron technology stock investors. So let's get into the details. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So in the company's fiscal third quarter, they delivered growth in revenue, gross profit margin, and earnings per share, all above the high end of their guidance. Now, the management team gave investors a forecast of what they thought they were going to deliver in terms of revenue, gross profit, earnings per share for the third quarter. And across all those critical metrics, the company did better than expected. They beat the higher end of their expectations in the quarter. Now, usually management teams will tell you a range of where they think these critical metrics will fall in the quarter. So they have a range. And what Micron did is, if you look at their low to high end of the range, they beat even the higher end of their range. So things came much better than they thought were the best case scenarios in the quarter. So that was great news for Micron investors. Partly driving that was the robust price increases and supply-demand conditions in the market. So because demand increased by way more than supply increased, Micron was able to increase prices on its products, and customers purchased at these higher prices, and that drove better profitability, better profit margin for Micron in the quarter. One of the areas of great growth for Micron was in data centers. Now, the company said in data center, rapidly growing AI demand enabled us to grow our revenue by over 50% on a sequential basis. So Micron joins the list of several companies, including Supermicro Computer, Dell, of course, the obvious, NVIDIA, etc., that are benefiting from the growth in data center investment. Amazon, Microsoft, Oracle, Facebook, Meta platforms are all investing in growth of data centers to support growth in their own business, and that's requiring investments in memory, in CPUs and GPUs, and so all of that supply chain associated with the data center are really thriving now, and Micron now joins that list of companies that are thriving as a result of investments in data centers. They continued to say that their mix of data center revenue is on track to reach record levels in 2024 and to grow significantly from there in 2025. Robust AI-driven demand for data center products is causing tightness on our leading-edge nodes, and they expect price increases to continue throughout 2024 despite only steady near-term demand for PCs and smartphones. So their bigger categories are PCs and smartphones, but the data center is on track to grow by so much that it's going to offset the flat-ish demand for PCs and smartphones in 2024. Further, the company expects this growth in data center not only for just 2024, but in 2025 as well, and that's going to offset the tightness in PCs and smartphones. Now, PCs are also expected to grow in 2025. So the company, given those factors, says that they can deliver substantial revenue records in 2025 with significantly improved profitability underpinned by their portfolio shift to higher margin products. So not only is revenue going to expand in 2025, record revenue, but also stronger profitability in 2025. That's great news for Micron stock investors, which I'll remind everyone, I have Micron rated as a buy, and I have Micron on my list of top stocks to buy. right now in 2024 and beyond. And this is partly why I feel that's the case. Supply and demand in the market is working in Micron's favor, and the company is improving operations, lowering costs while increasing prices. That's a great combination, and I like those for Micron stock investors. Now, moving on to technology and operations, the company's latest 1Y, 1-gamma DRAM pilot production, which uses extreme ultraviolet lithography, is progressing well, and they are on track for volume production in calendar year 2025. Remember, Micron is one of the few companies that employ ASML's EUV technology, and that's what you're seeing here. This is the cutting edge, right? This is the best of the best technology you can employ for production, and they're expanding here in 2025. So they now expect their fiscal 2024 DRAM front-end cost reductions, excluding the latest HBM, to be in the high single-digit percentage range, and they expect 2024 NAND, which is storage, right? DRAM is memory, NAND is storage, front-end cost reductions to be in the low double-digit percentage range. So big cost reductions, high single digits for DRAM and low double digits for storage. And as I highlighted earlier, those improvements in costs are leading to better profitability for Micron. So not only is demand increasing, but simultaneously they're working in cost reductions. Isn't that what you'd love to hear as an investor? Demand is increasing, driven by several factors, including artificial intelligence. Simultaneously, they're improving operations and cutting costs, and that factors leading to big increases in profitability. And that certainly is great news for Micron stock investors. And you can more understand why I've rated Micron so highly on my list of stocks to buy. And lastly, Micron is benefiting from the U.S. government's investment to try and onshore semiconductors. The U.S. government provided Micron $6.1 billion in grants under the CHIPS and Science Act. This will help support their leading-edge memory manufacturing expansions in Idaho and New York. And even though you might think that manufacturing in the U.S. would be more expensive for Micron, the company is saying that they expect to achieve cost-competitive, leading-edge manufacturing in the U.S. when these projects reach efficient manufacturing scale. So even though they're going to be in the U.S. and not in Taiwan, that's still going to be able to be cost-competitive for Micron when at scale. So they're getting support from the government to build manufacturing in the U.S. That's great news. They're getting $6.1 billion, but also this helps reduce geopolitical risk from manufacturing concentration in Taiwan. So great news here for Micron stock investors on several fronts. Revenue is expanding, profits are expanding because of cost cutting. Simultaneously, they're able to invest in their future, diversify away from their manufacturing concentration, and get $6 billion to help facilitate that diversification. So really great news for Micron stock investors. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.